With earnings season dead ahead, what are the risks and rewards for investors?
Well, as we get into the first earnings season of the new year, there's always a lot to think about. First of all, you're really getting the final numbers from the companies as they end 2017. For the most part, those numbers have been relatively friendly. We've seen 3/4 of the 4 quarters that are going to be released in the annual numbers. One of the things to think about is we're going into earnings season on a real uptick. Essentially the market's been straight up or with very few pauses over the last few weeks. And most stocks have seen that pattern continue. That can often bring its own set of headaches as you get into earnings season. If the companies do a reasonably good job of matching the expectations, really, or beating them slightly is really the benchmark that people are using, then I think the party continues for those stocks. But the risk to individual shareholders is you can find yourself in a pitfall every now and then. As some company, there's something in their numbers that they don't like, and they haven't pre-released, and that can get you into trouble. There have not been a ton of major negative pre-releases in advance of earnings, which you can take as a good sign that nobody's really warned that it's been bad, but on the other hand, are people ratcheting up their expectations, figuring that there's very few negative pre-announcements. It becomes very circular. The thing to think about here is, since it's really impossible to predict in advance who's going to do well into earnings and who's not, what would be your strategies? First of all, take a look at your risk profile in individual names. If you're overly concentrated in an individual name that's releasing earnings in the next couple of weeks, decide whether you're comfortable with that exposure. If that makes you nervous, lighten it up, whether that's by selling or by hedging with puts. But this is the time to consider whether you're comfortable with your exposure in individual names or not. At an extreme, what some people do is basically get out of individual names almost entirely and switch to ETFs, figuring that you don't have the individual wins and losses that you'd otherwise have. You'd have a much more, you tend to have a smoother result because you're buying a diversified portfolio rather than trading in single names. These are all things to consider, and I wish I could give a better guideline as to what to expect on a company-by-company basis, but that's one of the mysteries of earnings season. You don't know until it's out there.